Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've bid a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, as always, here with Joel Elconin and Dennis Dick. Hope you all had a good, relaxing weekend. We are here with you as we are every Monday. Got a lot to discuss. If you've been watching the market this morning, you've undoubtedly noticed that the momentum stocks are up again. So we're going to talk about them as they relate to the overall market. Whether we're feeling bullish or bearish this week with seasonality seeming to come into play as we head into the holiday season. We're going to be joined by Michael Pachter today. He is our guest. He'll stop by 8:35. He's an analyst for Wedbush Securities. He'll break down Best Buy, Take-Two, Activision Blizzard, EA, GameStop, Pandora. He can break down all those stocks when he's on in about a half hour or so. Not a ton in the way of earnings or ratings this morning, but we will take your questions from our chat as we always do. Joel, what is the word here in the S&Ps?
S&Ps, do you have them up on the screen here? Are we getting our video live? I just want to make sure.
Nope. Share the charts real fast.
The old share the chart trick. All right. S&Ps, we got a big old rally as Dennis has been talking about the last few days. Very, very weak close on Friday, and we opened up Monday near the close, and we have just gone straight up. I will give you your pre-market high. Your pre-market high comes in at 26.66. We got a couple highs at 26.71. That was the high from Wednesday, and then your intraday high was at 70.75. So some big targets on the upside. On a retracement here at back and fill, mid-range on the session. That doesn't come in until the 26.50 area. So hopefully we'll get a little bit of a pullback in the S&Ps. Crude getting a nice bounce. Crude is up 72 cents at 51.15. You put in a double bottom here just above the $50 level, and now you're at 51.20. The high of the session at 51.42. We have gold trading in the green as well, up $1.30 at 1224.50. Silver, that's in the green as well, only by a nickel here at 14.30. And Bitcoin under $4,000 here. The story is over. Got hit over the holidays, and we'll see if we can regain the $4,000 level here in Bitcoin. Triple D, you were calling for a little bit of a rebound here, and don't you hate when it happens overnight?
Yeah, well, and it always seems to happen overnight. I mean, I've been saying for the last few days that I think the major momos bottom. I think we had the washout in NVIDIA, the washout in AMD. Rotation has been keeping the S&Ps down, and I don't know if we've bottomed on the S&Ps, but there is that potential for a double bottom to still be in place because we did not get back to the October lows. The Qs took it out. The Qs did take out the lows. But if you look at stocks, and a lot of them did, but if you look at the stocks that we talked about 3 trading days ago, which would have been, I'm losing track of days because of the holidays, Joel, but I was talking about on the 20th on NVIDIA, and that would have been, Spencer, would that have been Tuesday the 20th? Remember I said that morning, I said I feel like it's going to be the washout, and then we had the wicked rally in NVIDIA and Square and, Amazon. All the major momos rallied significantly there. And the reason for that is just like, it just felt like everybody threw in the towel. And if you look Square that day, and these are stocks that obviously carried us higher for a long period of time over this year before the market cratered in early October. But Square got down to $55.37, opened right near those lows, washed kind of out. And now if you look at it, it's $65 in the pre-market. So just quietly here, despite, everybody talking, very, negatively about the market here over the weekend, Square's up $10 from the lows. This isn't on news. This is just on, a bounce, a good bounce. Is this, now the time to come in? I don't know about that because I don't like to chase stocks. But like I was saying, the last couple of days on the show on the Wednesday and Friday, I think on pullbacks, I think you're going to find buyers in stocks like Square. I think you're going to find buyers in stocks like Nvidia. I think you're going to find buyers in stocks like AMD. I think these stocks bottomed on that Tuesday morning when they all opened down 10% on no news. It just felt like the washout. And that's starting to play itself out to a certain extent because now we're getting further away from those lows. On Friday, they gave you a chance in Nvidia. It went all the way down to 142 bucks. I have been buying some stocks on pullbacks. I did not buy Nvidia, but I have been nibbling my toe into a few other higher, Momo names. I can talk about those in a few minutes, but I have been trying to, accumulate a little bit of stock on pullbacks just in case this is the big bottom. I don't know if it is the big bottom overall in the market, but I feel like, at least in the short term, I feel like we've bottomed. I feel like we have seasonality coming to help us.
Yep.
It's not as bleak, as the media would let on. Because when we were talking and we were looking, at the markets, and when the media was looking at the markets on Friday, a lot of people were very negative. Look, S&Ps are going to be down again, and it was looking, pretty ugly. But really, when you looked under the hood, and we've been doing that under the segments, the major momos that kept us higher, we're up on, we're holding up fairly well the last couple of trading days from those lows that they made on that Tuesday.
And also, will the Fed, won't the Fed, will the Fed defend the market here? Been bumping up rates. Maybe there's talk a little bit about the Fed cooling out for the rate hikes in 2019. China, U.S. relations. Don't we have a summit coming up? And also, Dennis, you just talked about seasonality. Maybe I'll have to track down Jeff Hirsch from Stock Traders Almanac and get his thoughts on this time of the year. But, it's just things can change so much with the stocks being closed that, you have that overnight action in the futures. And what I was preparing for was like a little flush out, get near that low of the move of 2603 and then do some nibbling or do some nibbling off the open and using that as a stop up point. But as always, the market throws you a curveball. Looking at retracements, 50% retracements if stocks have had a rally on something like Square. Would have loved to see it going through 64, during the regular session. You had a triple top at that area. So now you'll have to use 64 as support if you don't want to buy something on a gap. But it's going to be very hard for me to be chasing stocks off the open here. Going to have to wait for some kind of a pullback, not necessarily shorting, but I mean, come on. Nick, at least at this point, it looks like you're buying other people's profits here.
You are. And we haven't been rewarded for chasing in this market. So I'm not chasing. You got to use the opportunities like maybe on Friday morning and last Thursday, or not on Wednesday, when you get the pullbacks in the stocks that you've been looking for, that's your shopping list. This is what we said, Tuesday. And I think we said it Wednesday too. I think I said it a couple of times. I said, if you've got your shopping list, you're getting pullbacks here, and this is where you start to nibble. And if you were nibbling those last couple of days, you've been rewarded. I've been kind of going more emerging markets too. Like I bought more BABA. I've been nibbling into more emerging markets funds, which are, the Canadian equivalent of the EEM. Just because I feel like China doesn't look as bleak as it once did. There is talk that they're going to have another meeting. I think there's going to be a deal here eventually. Whether you get the relief pop off that or not, I don't know, because the market is already kind of thinking on the same lines, I think, as me now, because, we're up here again this morning. But it's hard to chase stocks here. So I don't want to come in here and buy Square now. I mean, it's 10 points off the lows, and people, don't realize that because the market's, picture's still bleak, but Square's $10 off the lows from $55. Are we going to get a retest of that? Maybe. But again, if you are looking for a retest of that, I think you got a lot of people who are going to be looking to buy it before you get to those lows. And you also have the people who say, hey, December is typically a pretty good month for equities, especially when you start getting towards the last couple of weeks. Retailers, we haven't heard too much from Black Friday. I don't think they were blowing it away. But, it's a consideration, too, is that they've been very weak into, Black Friday, into their typical, retail season where they kick some butt usually. You look at a Kohl's, you look at a Nordstrom, they've been pretty weak. But did they bottom, too, on that Tuesday? If you look, most of the stocks on that 20th, like Kohl's, was down at 62.03. Now you're at $64. So you're starting to say, hey, maybe there's that potential that the bottom is placed. Nordstrom washed out down to 48. Well, it's now at 52 in the pre-market here. So you're now 4 points off the low. So there's starting to be a little bit, when you start looking under the hood, even in the retail sector, you're seeing some stocks that are off the lows. Now, there's going to be some rotation. You've got to understand rotation too. Stocks like Johnson & Johnson, I think I said this last week, I think they've topped out. And I think that's a stock that could actually get hit on a day like this. Procter & Gamble, same thing. I think it topped out. I'm a seller of rallies in the defensive stocks of Procter & Gamble's. If I'm wrong and the market starts to crater and start to go, these will start to catch a bit. But Coke, Procter & Gamble, Johnson & Johnson are moving opposite the market right now. So keep that in mind. When you're seeing the market up, typically these stocks will not be participating. They actually usually show weakness.
And you do have the G20 meeting, Mary Miller's, how can you buy anything ahead of G20? And just from our perspective, we're just looking at the technical setups, what the market did last week. And, at those G20 meetings, I mean, do they ever get into big fight? Do they ever, come at negative things? All these world leaders getting together to talk about the economy. I mean, I tend to think these things, tend to, come out with more good news than bad news. But, just look at technically speaking, tested the bottom of the trading range on Friday. Setups, anything can happen during these G20 meetings, but it seems to me there's a potential catalyst, and the potential catalysts are to the upside.
There's some short-term catalysts here. Is this the ultimate bottom, and are we completely out of the woods? These shorts are still, the S&P is still not healthy. Square, it's still in a hard downtrend here. I'm just saying the short-term bottom, I think, is in. I think you could get a retest eventually, but like you said, Joel, there's a lot of things working in this market's favor all of a sudden, and there wasn't a week ago. But now, if you get, you're potentially going to get a meeting. If you ever, get a deal struck with China, that's going to help. You've got, the seasonality aspect of December being, a pretty good month for the markets. There's a good argument here that maybe I want to own a little bit of stocks, at least for the next couple of weeks. There's that argument there. But again, it's difficult to chase. So I think you're buying here now. It's hard. But if you get that next step, maybe you're going to find more buyers. That's what we saw really on, obviously, Friday's action, quiet trade. We got a dip in the overall market, and what they do, they scooped up, and they've scooped them up over the weekend here, and obviously trading a lot higher here now.
Also, as a potential catalyst here, Brexit. It looks like they finally maybe coming to a soft Brexit here. There was some talks over the weekend, so I know there was a little bit of trepidation in the markets regarding that. Dennis Griffin 11 is talking about in the defensive category utilities, which have been
throw those in there for sure. Yep. Like as stocks that you don't want to own if this market goes into rally mode.
And utilities, I mean, your Verizon's been on we consider it a utility because of the high dividend. But just what Dennis is trying to point out to you here is that, money moves around. And as money moves around, it has to come from somewhere. There's been safety here. The Momos have not been in favor. A lot of talk about Facebook. I mean, Barron's came out favorable over the weekend. I don't know how many times they've come out favorable on that. But, same thing here. You had your washout day on Tuesday trying to rebound. If anything, if you're a longer term trader and you don't mind, risking 4, 5, 6, 7 points or something in a stock, hoping to get 15 or 20, maybe dip your toe in Facebook here.
I bought more Facebook too.
You did?
So, but I was early on it. I bought it before the big dip. So, but I've, been nibbling into all these stocks on the pullbacks here. Not that this isn't a long-term portfolio. I just feel like Facebook long-term, maybe there's something that comes out better eventually. Maybe it's their lunch, but I mean, it's getting to a valuation level where it starts to get attractive. They got a lot of cash. They got a lot of other irons on the fire. They got a lot going on. So I don't mind it down here at $133.
What do you need here? It's up $143 here. Let's go. What I like to do is look at the range from Friday, 134.50. So you're still within Friday's range. You haven't even taken out Friday's high yet. 134.50. So you're not buying this on a gap fill. Don't expect a big move higher until you clear that Friday's high at 134.50. And let's just go through the big dogs here real quickly. Apple trading up 233 at 174.62. You got to assume Warren's out there buying, right? And I was actually talking with Chubbs about this, and I couldn't find a clip. Remember, he was on CNBC. I thought it was like about a month ago. And, it was 215, 220. And he was doing what you do, Dennis. He was talking against his own position. He wasn't selling at over $200, but he wasn't buying, and he was hoping for a pullback. So let's look at the dailies here and see. Yep. And what do you got on the dailies here? You made the low of the move on Friday at 172.10. 172.29 was the close. So not even buying this in a gap situation. Really not.
I mean, it was a little different story here. So where a lot of stocks, like I said, bought on the Tuesday, Apple did not. Apple
Nope.
did not bounce. So it's still heavier than the other ones. So that's, one argument for the bears here. And there's obviously a bear case here too. So I don't want to come over here and say, we're full on bullish. You just got to be aware that there's some arguments for the bull here. But there's also some arguments for the bear. And the bear arguments would be, hey, Apple didn't bottom on that Tuesday. Apple made new lows on Friday. Apple still doesn't look that healthy to me. Nope. Obviously, it's straight down since then. So that's the argument in the other case, is that Apple chart looks a hell of a lot worse than a lot of the other Momos. Apple's not necessarily a Momo, but it's traded like a Momo, at least for a lot of 2018 and kind of going with the flow. So keep that in mind, that Apple obviously did make new lows on the move.
Yeah, I mean, there's just bad news after bad news been coming out on with as far as the supplier cuts and iPhone sales, Amazon. I mean, that you got that trading up $14, but is that a healthy looking chart? No, but did bottom on Tuesday.
Tuesday was still a washout.
Yep.
Open right up at the lows.
And
wow. And how do we identify that? And we talked about this a little bit last week. It's when stocks are trading down. That was down 100 points in the pre-market. There was no news. Square was down 10%. Twilio was down 12%. We had Boeing trading down 20 points in the pre-market, and there was no real news. It was just overall market. And we were looking, and remember, I was scratching my head that day too, because it was like, man, you're looking at Square down 10%. You're looking at Twilio down 12%. And you're looking at the Qs only down 1.5%. I was thinking, I'm like, these stocks are down way too much for what the Qs are down. And what they do, they came in and I bought those right off the open.
So how the stocks
that's why I think I had the short-term bottom.
What about today? Or stocks is to me, some of the Momos. Let's do a early look.
They're trading. Yeah. Okay. So we're up 1% on the S&Ps. We're up 1.5% on the Qs. We're seeing, a pretty decent rally like Square, but they're not up that much. Like Square's only up 2.25%. So I'm not seeing the opposite thing here at all. I'm seeing the stocks participate. I'm seeing validity, at least in the pre-market in this rally. I'm seeing Home Depot trade up 1%. I'm seeing Goldman Sachs and JP Morgan both trading up almost 1%. So I'm kind of seeing the validity there. I'm seeing a lot of green. Like when I look at my screen, and it's very early. I mean, we're still an hour 20 from the open, or hour 10 from the open. The only red I see on my screen right now, and I've got a bunch of the S&P components right there, is Lilly, because Lilly is getting downgraded this morning from Citigroup. I see Duke Energy trading down here just slightly here, and that's defensive, so we know it's probably going to trade lower. But besides that, I see a lot of green.
Lilly here. We have it down trading 48 cents in the pre-market. Let's just go to the daily charts. As Dennis mentioned, these have been your defensive stocks. I mean, some big seller over 115 here. I think it did finally make a new all-time high in Lilly. That was a while back at 116.61 here. So I don't know, a lot of room underneath this one. Stargazer, the banks. Let's just talk the XLF a little bit. I was looking at that face of Bank America on Friday on the close, and it was right, it bottomed under 27 a couple weeks in a row, and I was thinking of nibbling on it, leading on that, but it was just such a weak close in the S&Ps. It scared me out of it. But one other thing to note, take a look at your bearings, and Warren's buying the banks. He's bullish the banks here. So his investment philosophy's worked out pretty well. Let's look at the XLF. I mean, Goldman's been the big drag on the financials.
Big time.
Yeah.
And it has not made a new low too. Another case for the bears. And, one thing we've been saying too is rotation, as much as it was helping the market, before, it seems to be hurting it, because they seem to find something to sell to keep the index down. Are they going to do that again today? Potentially. But I mean, this Goldman Sachs chart is ugly.
Yeah. And, there's been news on that. I mean, the only thing that as far as like going all in the banks or, banks did not rally in what was a supposed, we had a rising interest rates environment. And now there's talk about the Fed, backing off a little bit. So I do have some banks long-term and everything, and we'll definitely trade them short-term here. I'm just not sure, if interest rates, if they didn't rally when interest rates were going up, or, are they going to rally when interest rates?
I still don't love the banks. And I think there's other issues there. I'm more of looking at the techs and, stuff that, came up here as, where I'm nibbling. China, When I look at the banks, I just see no sign of bottom. I mean, we had the Deutsche Bank indicator we used for a long time this year. It's $9.55, getting a rally here this morning, but 9.25. I mean, this is one of the biggest banks, if not the biggest bank over in Europe. And it doesn't look healthy at all. And you can look under the hood at the other ones too. Maybe there's some Brexit involved with Barclays. You know, you can look at the UBS and ING. These are all near the lows. And then you look at our banks, the U.S. banks, Bank of America, Goldman, Morgan. The Canadian banks are a mess because oil's a mess, so that's not helping them. Banks do not look healthy. So when you really look under the hood here, as we look further, it makes me back off a little bit on, you know, getting all bullish here. And this helps, you know, going through this exercise here helps me with my trading as well, because I come in here and you're like, rah, rah, bull, bull. You see a lot of green, but then you're still like, man, the banks don't look good. You know, you're still looking, Apple still doesn't look that healthy. And sure, you know, maybe we had a bottom in NVIDIA and Square, but am I chasing those things up 10% in the last couple of days? Probably not.
All right, on this Monday morning with the S&Ps up 29.25, Spencer, you want to just touch on some news here? I mean, I'm just looking. It's mainly, you know, we've been talking just general market here. Do you got any specific stocks that are news related? Not much in the earnings front, I guess.
No, biggest headlines this morning are in the automaker space. So GM and Fiat Chrysler. GM is shutting down their plant in Ontario, and Fiat Chrysler is reportedly trying to sell its robotics unit. Both trading up a little bit on those headlines. That's really not, like you said, not a lot going on this morning as far as headlines are concerned. There are a couple other small ones, but those are the two that caught my eye.
Yeah, Dennis, if you want to go to another sector, it's not looking too good. I mean, you know, these auto charts, Ford did fill the gap from earnings. I did see that, but, you know, wow. I did notice really quiet consolidation Ford. It had that big gap up after the Goldman Sachs upgrade, came back, filled that gap, finding a home at $9, trading up in the pre-market. So I guess if you're looking at the whole 9 here, potential support in that, GM had to pop off its earnings, and you know, it did fill the gap as well. That was 5-6 days ago. So you're not chasing this one. FCAU, selling the robotics unit, they must not be too enthused about driverless cars if they're doing that. That stock's trying to get off the mat. And let's just take a look at Tesla. Got up over 360 here. Got to 366.75.
Breaking down.
Yeah, it's breaking down again. Couldn't get back to that 380. Dennis, any thoughts on Tesla?
Well, I mean, this chart looks a little bit broken to me now. So now you see all that air below. So I think you do find sellers of the rally here in Tesla. It's getting into resistance. It's not a big move. I mean, it went from 250 to 350 in the better part of a month. It held up well, very well during the recent correction, but now it's starting to show some weakness. And again, it's just the rotation. I mean, they're turning around. They were buying the laggards and those stocks that have been underperforming. They've been selling some of the stocks that have been performing. I don't know why Tesla all of a sudden, you know, feels like it's trading more like a defensive stock, because, you know, when the market started, you know, rallying here, you know, the last couple of days, Tesla started to actually show weakness. Hey. So it's trading with Procter & Gamble, Johnson & Johnson. I have no idea why that is, but that correlation won't last.
Did you guys see what Elon Musk said last night on TV?
What did he say?
He said Tesla earlier this year, Tesla was within single-digit weeks of dying.
What?
Because they couldn't make their Model 3, you know, production estimates. He said on TV, an interview last night on Axios on HBO, that Tesla was in single digit. They were bleeding so much cash from the Model 3 production that they were within single digit weeks of dying. That's what he said.
Oh, so I just want to run out and buy this stock.
Got to keep his mouth shut. I mean, here he is touting for, you know, oh yeah, we're fine. You know, he made that April Fool's joke, and now he's telling us some of that was real. Like some of that really, like we knew they were bleeding cash. Obviously, anybody who can read a, you know, income statement can read their cash flow statement can read their bleeding cash. But, you know, was that going to be the case that they weren't going to get financing? Is that what he's just saying? That they might, if they wouldn't have turned it around, they weren't going to get the financing to keep them going?
I don't know if you said that.
Thought.
Yeah.
Well, that's a scary thought. I mean, I think this is an exexaggeration on his own part here, because I think they were going to get the financing.
You're probably right.
It's a ridiculous thing to say, though. I mean, I have no idea what this guy's doing half the time. The biggest problem with Tesla is he just opens his mouth.
Yeah, I did not see that. The other thing about the Tesla chart here that I just don't like when stocks have a quick run up here from 260 to over 360. I mean, can you really lean on, like, let's say this daily low that you had in Tesla at 320? There's a low at 334.33. We're below that. I mean, can you really lean on any of these? I guess we'll have to go below here. Can you really lean on like the 316 low? I mean, where's the comp? Actually, there's no daily lows down to 306.65. So if you're buying this thing and you want to lean on a daily low, then, that's the area you're going to. So really still, it kind of fakes people out, but let's go to a little bit longer term. I mean, Tesla is still in a trading range, and it's a pretty big trading range is that. But to get a better perspective on it, let me go to the weekly here. And 260 to 360, and you have spent some times out of that. But for the most part, since going back to early 2017, we've been in a trading range here, and it looks like a lot of people are taking advantage of that trading range. Chico Solar had some numbers. I keep thinking that stock is going off the board, but is that another?
No, not going off the board yet, Joel. But several of them are, so I can see why you would think that. But yeah, JKS this morning, Q3 EPS 76 cents versus a 9-cent loss estimate. Sales of $974 versus $934 million. So a huge EPS beat. I don't know what the cause of that was, and the sales beat as well.
Trading up here, $1.12 at 1034.
Report on the right day.
Yep.
China's hot, and this is Jinko Solar. This is Chinese, right?
Yep.
Yeah. Yep.
Yeah. So China's hot this morning. Report on the right day. I can see why the stock catches a bid.
Let's see if we can get over $11. That's going to be a big target for me. 1092 was your 3-day high, and I see another high back in early October here at 1119. So like to see it continue higher, get into the $11 handle. We haven't talked First Solar in a long time.
Where is that? I haven't even looked at it in a long time. Where is that thing? That's interesting. Look at all the lows in the same area, Joe. 41.82 last 3 days. 41.82, 42.06, and then kind of getting out of there. 42.06, so 42.04, 42.06. So 45 though. Now you look overhead and you're like, you got some resistance there too. So, but it's trying to form a little bit of a bottom.
Oh yeah, we like these formations here.
Yeah.
Where you get 4, 5, 6
Tradable.
lows in in the same area. I mean, isn't that is from the Gilmo report, he would say that's a sign of an institution, coming there, accumulating stock here. So if you're looking at a level to lean on, First Solar, I mean, the whole oil going down, solar going down. I mean, renewable energy, not sure where things are going with that, but let's talk oil a little bit here, Dennis. We're getting to bounce the psychological $50 level. If you were leaning on that, you had a daily low at 50.10 and 50.15. How did you get to check on your oil stocks over the weekend?
Oh, I've been rocked in those. And obviously I own a lot of Canadian stocks being Canadian, and it's mostly ETFs that I have. I have very few oil stocks directly, but I got a couple energy ETFs, and those have just been killed. So, I mean, in this recent fall, like I was in October, I was looking really good in the beginning of October, and nothing has been hit harder than I would say oil stocks here. If you're looking just in the last month and a half, and you've seen a lot of carnage, I don't think anything's more than the USO and oil.
Yeah, look at that daily chart here, but psychological $50 level. You don't know what's going to come out of the G20 meetings here, but just when it was 80 and everyone thought it was going to 100, now it's hanging in here at the $50 level. Dennis, you did say someone tweeted about you about Virtue Financial. Did you want to answer that question right now?
Yeah. So just a Twitter follower was asking me about Virtue Financial. Let me just open my Twitter account here, and I will get the actual question, which was from Caleb, and I'm sorry if I'm getting your name wrong, Almawardi. And he said, Virtue, can you explain to me on the pre-market show why Virtue Financial rises when stocks dip, like what happened in October? And he also mentioned that Virtue is your biggest holding and you keep adding to it on dips. Is Virtue considered a defensive stock? So I've talked about this on the show multiple times over the course of the last month and a half. And yes, I do believe it's a VIX stock. So it may not be necessarily defensive, but typically when the VIX is rising, stocks are going down. And it's a stock that's going to usually make more money. A company's going to make more money when VIX is going up. Just like I say, I'm kind of a VIX person where the VIX is going up, I'm making more money. Virtu is taking advantage of little micro market inefficiencies for the most part, doing a lot of market making. Then as spreads get wider, that's good for them. And efficiencies open up when the VIX goes up. So when the VIX goes up, stocks like Virtu Financial typically will do a little bit better. Also, that's just a company I think that's doing a lot of things right. The recent purchase over there of ITG, I think is a good idea. They've done a lot of different things. They're trying to go basically head to head with Citadel, getting into obviously and participating in a lot of payment for order flow arrangements and getting, first chance to interact with a lot of retail, more uninformed orders, if you will. Not that all retail traders are uninformed, but your typical retail trader is going to know probably less than your typical prop trader. And that's why, everybody's hungry to get, interaction with retail order flow. They've got a lot of things that they're doing right now. So I'm a believer in this company. I do own a ton of the stocks. So I am talking my book here right now. This is my long-term investment portfolio. And as it dips, I have been buying more of it. I like VIRT.
Let's see, for VIRT, filled the gap nicely from back at the end of July, but it looks like you got some sellers accumulating here over $26. I would just say to confirm maybe another breakout here, I'd say over 27. I see some highs at 26.63, 26.85, 26.74. So just under $27. There seem to be some sellers. Dennis,
that's a good point, Joel. I mean, it's had a pretty good run, and it has basically been defensive and performed very well in October and November. So, like I was joking, I said Virtu Financial is my gold because I don't like gold, and gold will typically rise in a market environment that's showing weakness. Well, Virtu Financial did the same thing. I mean, VIRT in the last 2 months, it was at $20 basically when the sell-off started. It's 26. So you're talking about a stock that's had a nice little, what's the math on that, Joel? 25, I guess we are this morning. So you're up about 5 points on a $20 stock. You have a nice little 20% pop here, 25% pop here in this stock over the course of the last month and a half. So it has done what I expected it to do, and it's been a pretty good winner for me, at least one of the only winners in my long-term investment portfolio over the course of the last couple months.
We're starting to trickle lower here, Dennis, off that pre-market high of 26.66. SPOO still trading up a firm 27.75 points at 57.25. Any selling balances or anything sticking out to you?
They were small. I just saw them come out. There's nothing really sticking out, Joel. It's very small out there. AT&T 106,000 to buy. That's interesting because typically that stock will go down actually as the market goes higher. It portrays more like a bond. Your best indicator when you're looking at a stock like AT&T is usually the TLT. If it's trading down and weaker, usually that's showing weakness. But the TLT is not doing much here this morning either. You look at this and you think, what is really the driver here? I see stocks up across the board. Oil is bouncing a little bit here this morning, but when you put it in perspective, it's not much of a bounce at all from where we've been. And but China is really what I really see, really strong here this morning. Overnight, you can see the FXI is taking off, and that's been a big worry. Like FXI is trading up 1.86%, DEM's trading up 1.4%. So you start to think about those are the stocks that maybe go higher, but the imbalances in the stocks are not showing a lot of buyers here this morning, and that's maybe spooking the market because I don't see big buyers, I don't see big sellers, I just kind of see me. And that's probably because we're away from the open, and institutions, again, are very reluctant to show their hands early here because there is just so much volatility as of late. And they don't want to spook their own stock.
Okay, we got a good guest here coming up at 8:35. Spencer, you want to?
Yes, we do. Michael Pachter, analyst at Wedbush Securities, also host of the Pachter Factor show on YouTube. We'll be right back in a moment with Michael. And as promised, here is Michael Pachter, equity analyst at Wedbush Securities, also the host of the very well-named show, The Pachter Factor, on YouTube. Michael, how's it going today?
Good, thank you. Rested and ready to go.
Yeah, did you have a good Thanksgiving there? Do you have a favorite Thanksgiving dish? It's something that you cook up, or do you have?
I know this sounds like a crazy superlative, but I make stuffing better than anybody on the planet, so that's my favorite.
Okay, you like your own cooking, and I know you're out there on
sausage and leek if you want. The secret is the leeks. You overload it with leeks, and then you cook it for about 3 hours at low heat. Let all the moisture evaporate, and it just leaves an amazing flavor. We're
gonna have to get you on with Ken Palkari sometime, because he sends out his recipes with his morning note. Just the other thing, want to make sure, I know you're out there in California. The fires. I hope you're safe and sound, and your family and everyone. You're a little bit of a distance from those fires.
Yeah, I'm 40 miles away. I live in Long Beach, which is the flat part of the beach. So the only thing that fires did to us was pollute the air. Pretty far away.
Okay, so let's just move on to these gaming stocks, and holy mackerel! I mean, a lot of different factors going in, but first, let's give us like your overall take on this sell-off, and then we'll drill down into some of the individual issues.
They historically have traded at about a 25% premium to the market, and they got a bit ahead of themselves. They were all trading at about a 50% premium. So I'm talking about Activision, Blizzard, Electronic Arts, Take-Two, Ubisoft, and Nintendo are the 5 publishers that I cover. And they were all up there in the high 20s multiples on forward earnings. And perhaps that was a bit overdone. I mean, I'll get to that in a second, but they reverted back to right about the market multiple. And it depends on, how you look at the stocks, but a couple of them, EA and Take-Two in particular, have a lot of cash. EA's got about $11 or $12 a share in cash, Take-Two about 11. So on sub 100 market price, that's a pretty meaningful percentage. So if you value them X cash, EA was trading down to about 16 times, and that's about the market multiple. The reason they traded a premium is that the market looks at these guys and thinks that the demographics are good, meaning that, if you started playing games when you were 15 and you're now 35, you're still playing games. And when you're 55, you're still going to be playing games. So it's reminiscent of healthcare. Back in the 60s, as we were, getting an aging population and we expanded healthcare coverage, you ended up with more and more people accessing healthcare, and healthcare stocks did well for 40 or 50 years. I think the game companies are like that, and I think that for real, in 40 years, you're going to have 80-year-old people playing games. And I think that, you're seeing an acceleration of that with mobile games, obviously, and tablet games, and lots of free-to-play games. And so the publishers should trade at a premium. What happened is that one of them pre-announced August 30th, Electronic Arts, and shooting itself in the foot. I mean, their problems were of their own making. They delayed some games, and that was the biggest driver of the downturn. The second biggest driver was that there's a free game called Fortnite, which I'm sure all of the listeners have heard of, and it's taken the world by storm. It's killing it. It's doing 300 to 400 million a month in transactions, and it's free. And that's sucking up a lot of time. And I think this reminds me of 2010. The publishers all traded down to really low multiples in 2010 because the market thought mobile games were going to replace console and PC games. And so the market bid all the stocks down, and that was the time to invest. You would have made hundreds of % in return had you bought these guys back then, because the market was wrong. The market thinks Fortnite is wiping these guys out, notwithstanding that EA said, hey, it was game delays. And Activision said, hey, one of our games, Destiny, didn't perform as well as we expected. It doesn't matter. The market has decided that Fortnite is sucking all, of the oxygen out of the atmosphere, and there's nobody left to survive. And so they're bidding these stocks down. So I guess the good news for investors is Black Friday for game publishers came early, and you get to buy them at a discount. And I think you buy Activision at 50, you're looking at a double in 2 years, possibly in one. If you buy Electronic Arts at 82, you're looking at 50% pretty soon in the next 6 months, I'd say. And, Take-Two, kind of the same story. I mean, down here at 105, and it actually briefly was under 100, you're probably looking at 125 in a quarter. So I'd say 25% upside in Take-Two quickly, 50% in EA over the intermediate term, and 100% in Activision over the longer term. Ubi's a little tougher because it's a foreign listed stock, so it's not as widely held, and institutions in the U.S. have trouble buying it. But same thing, I'd say that thing pops to 150% return from 67 euros in the next probably 8 months. So you've got tremendous upside in these guys. The one that continues to suck is Nintendo. They put out unrealistic guidance that they'd sell 20 million Switch hardware units. They're tracking to about 13. And if they get a lift in December, they're launching Super Smash Brothers in a week. That game is a big driver of sales. They'll probably get to 15 million, but I don't see a path to 20 million consoles sold, which means they're going to whiff when they report numbers. They're eventually going to have to lower their guide. And the reason the stock has held up as well as it has is that the Japanese analysts, the Asian analysts, just some in Singapore and other countries, Hong Kong, those guys tend to write whatever management says, and I think it's impolite to argue that management might be wrong. They're wrong. I say there's a 0.01% chance they sell 20 million Switches. If they cut the price by 50%, sure, but that's not coming soon.
You play Fortnite? You play Fortnite with Drake?
No, definitely not with Drake. I think the game is cartoony and kind of stupid. And that's part of its appeal, that it's cartoony. So, you don't actually kill people. They just you shoot them in the head with a bazooka and they fall down and they're out. But I find it too silly. I like PlayerUnknown Battleground, which is abbreviated PUBG. And the new Call of Duty has a battle royale mode called Blackout that is very realistic. It's very much Call of Duty with Call of Duty weapons. And when you shoot somebody, they bleed and they die. So I prefer more realistic, but, Fortnite, not my thing. It's been decades since I was a 9-year-old boy, so I don't think the game is aimed at me.
Same here. I just want to ask you a question just from, you're an equity analyst there for Wedbush Securities. You do your research. It's viewed by your customers, institutions. Like, when do these guys, you look at a stock like, let's just use EA here, and they went to 20 to 40 to 60 to 80 to 100, 120, up over 140. They're been sitting, when do the institutions on something like this, do they just hold on and they'll just let it, have a 2-for-1 stock split? Or do you think that, some of these moves are, these longer, just not day traders, but the big institutions here, saying the run is over, the multiple is over. Have you seen that
I don't want to, I'm going to let you in on a dirty little secret on the institutional equity side. Institutions are populated by a number of analysts that run the range from extraordinarily sophisticated and well-versed, and they really do their work and they understand everything about the industry. And I would say, the Fidelity video game analyst is as good as any on the street. And then they range from him down to guys who were told by their bosses, look at these video game stocks, they're moving, and they literally spend about a day or two or a week before they make an investment. So they tend to be more momentum investors. And so as EA went from 80 to 150, they were the guys that fueled that rise, and they bought it blindly, not actually understanding what EA does. And it's reminiscent of Netflix, in 2018 going from 200 to 420. It's the same story. The guys who bought it, at 300 for the first time, have no clue what Netflix does or how they make money. And, so I saw a lot of that. And I'd say, I normally talk to about 50 or 60 investors a week. I was getting, 2 newbie calls a week a year ago. I started getting 10 early this year, and then it turned into 20 and then 30. So it's amazing to me the percentage of my customer base, my client base, that is unsophisticated about these stocks, meaning that they bought them blindly on the way up on the upward momentum, and they sold them blindly on the way down on the downward momentum. The hedge funds tend to do their homework. That ratio, instead of being 50-50, kind of generalists and sophisticated, is more like 90-10, sophisticated to generalist. So there's a handful of people who actually don't know what they're doing on the hedge fund side, but on the mutual fund side, it's a much greater percentage.
Michael, you were talking about Take-Two earlier. I wanted to ask you about Red Dead Redemption 2 and where you see that going forward. They had extremely high expectations, and I guess they exceeded them with $750 million in sales in the opening weekend for that game alone, the largest opening weekend ever. What did that sort of do for your long-term thesis on Take-Two?
Well, it's unfortunately, you look at forward sales, not at past sales. So sure, the game just killed it. And that 725 million was sell through. So at $60, that's 12 million units. There's probably a slightly higher mix of premium SKUs. So it's probably $66, but it's 11 million units in 3 days. That's amazing. I think that a lot of investors think that it's like box office. So if it sold, 11 million in 3 days, it was going to sell 33 million in a few months. And when the company reported, their guidance suggested that the number is closer to 20, and that freaked people out. So that's why the stock has gone down. And again, that's these generalists who don't understand the games industry at all. And when the games industry compares itself to movie box office, the generalists apply box office rules three times opening weekend. And that's what's killing these stocks. Long term for Take-Two, I know that they have literally 8 teams working at Rockstar, which is their division that makes Red Dead and Grand Theft Auto, working on different games. And those guys haven't produced a game since 2013. Red Dead's the only one. So we're about to get a slew of games from them, probably none in 2019 because they haven't announced one yet. But I would say annually in 2020 and beyond for 4 or 5 years, possibly 2 a year. So that means they're set up. It's just that management won't tell us that. If they tell you, they'll have to kill you. They're not particularly forthcoming, with information. They're not particularly transparent. And that's just their style. And so investors are left to guess. And that's why the stock is kind of languishing at its, 1 year lows. If they would ever tell us, hey, there's a Rockstar game a year coming in every year of the decade coming, the stock would rip.
Great question here from our chat here, Michael. Do you think that long-term, the video game publishers will win the VR, AR battle against the Facebooks and the Googles of the world?
Hey, Michael, before you answer that, I saw a commercial, and these people are wearing these heavy. There's just no way you're going to get me to put. I don't play games, but I just think of having the most major headache from that. Do you really think that? And that to go along with that question. Sorry to interrupt, but man, I saw.
No, I broke a pair of glasses frames because my glasses got stuck in an HTC Vive headset, and I as I pulled them out, they cracked. So yeah, bulky, uncomfortable. You sweat like crazy. I don't know that we're going to get rid of headsets anytime soon. I just don't think VR is a mass market product for a while. Think of VR like cell phones. No one in their right mind would buy a cell phone to play games. You buy a cell phone to communicate. And when VR has commercial applications where you feel like you need it to do work or to do all your shopping or to go to the doctor or to look at real estate or, do whatever, then I think it'll be a mass market product. That's not happening for at least 5 or 6 years. But the answer to the question of the publisher is going to thrive if they are the most consumed content on VR, which is what they are on cell phones, then yes, they'll thrive. I just don't see publishers being the driver of VR headset adoption. They are for PlayStation VR, but Oculus and ACC combined are probably under 2 million units cumulatively. So we're just not talking about a big business yet. And I don't think it becomes a big business until probably 2025. AR is different, and I think you'll see more adoption of augmented reality. But again, you can do that with your cell phone. If you play Pokemon Go, that's AR. So it's a simpler technology, and it's a lot easier to implement with simple electronics. VR is expensive. The headsets are uncomfortable, and I don't see big adoption for several years.
Michael, last one here, and we'll let you run. But I'm wondering if you follow Turtle Beach at all?
Yes, I do.
Thoughts on that one going forward? It's sort of I guess it's a hardware play.
Yeah, the shorts hate it, and I think that the short thesis is that headsets are a commodity and that these guys can't possibly compete. I think what the shorts miss is that Turtle Beach doesn't sell very many headsets. So, there's over 300 million headsets sold a year globally, and for all different reasons. I mean, obviously, but I mean aftermarket headsets sold. And Turtle Beach, with its, call it 250 million or 275 million of guidance, is probably selling 5 million of those. So they have literally 2% market share. And the shorts seem to think that 2% is going to shrink to 1%. And that is just stupid. They have established themselves as a niche product for hardcore gamers, and things like Fortnite help them. And the guilty secret here is they ended September with 79 million of inventory, and they generate about a 35% margin. That means they have inventory on hand to support 120 million in sales in the quarter, and they guided to 94. We did channel checks this weekend, and they were sold out of their $149 headset almost everywhere. So to be real, and inventory levels super low everywhere we went. So if they have inventory to support 120 million and they're guiding to 94, and inventory levels at retail are low, they're likely going to crush that $94 million number. So I would be long Turtle Beach into holiday. If you hate them for next year and beyond because you think Fortnite's a fad, go for it. That's fine. But if you're short now, you get your face ripped off. So I think that longs are going to win this holiday, and I would position long on the stock heading into their December earnings call, which will be in January.
Thanks a lot, Michael. Are you going to make it out to the new esports stadium there in Arlington?
Not anytime soon.
All right. Well, I just saw that they opened over the weekend, and largest esports only facility in North America. Mike, thanks so much for your time today. It's been wonderful chatting with you, and we'll have you on in a little bit there. Thanks a lot.
Okay. Thank you. Bye-bye.
All right, so S&P futures still in the green here by 27.75, trading at 26.57 and a quarter. Dennis, did you gear up to buy all your gaming stocks here? I know
I've been already buying them. I bought more Activision Blizzard. Funny, that he's. I liked what he was saying there because I've got Activision Blizzard. I bought some at 54. I bought some more at 51. I think I'm averaging about $53. So I'm down a little bit in it, but threw it in the long-term investment portfolio. Just because I still believe in the esports thing, and I see these stocks as, hey, they just gave back 2 years of gains. I've wanted to own some of these companies. I like the skins aspect of it, where they can sell stuff within the games. I think Activision Blizzard, I think we were talking before, is like projecting like as much as $4 billion in sales just from skins. I mean, I like these stocks long term too. So I liked what Michael Pachter was saying for my long-term investment portfolio. Short-term, the trends are still not your friend. Are we in the bottom? Who knows? But I'm just throwing them in there and hoping for the best in the long-term portfolio. So I've got EA and Activision Blizzard in the long-term portfolio.
You've been waiting a long time on these, Dennis. I know.
Yeah, I waited for my chance. Yeah. And this gave it to me. I mean, you've got 2 years of gains getting wiped out, and maybe it continues to get ugly. The trend is still not your friend. Definitely, if you're coming in here right now, you're trying to call a bottom. But, that's, long-term portfolio. I've always made pretty good money playing the contrarian. Short-term trading, I don't like, going against the trends. It's a completely different animal. But in the long-term portfolio, some of my best investments have been when there's blood in the water, and there's blood in the waters in these gaming stocks right now.
Yeah, there's plenty of that. We did mention the Lilly downgrade or downgraded at Citigroup. HSBC here is coming up to, it's giving an upgrade here to Schlumberger, and just a stock that went down when oil went up and went down when oil's going down. I mean, any interest in this one off the it's just horrible. Look at that chart. I mean,
I don't know why, Halliburton, Schlumberger did not
Yeah.
really participate with the huge run that we had in oil, especially, and towards the end of the year, they went up a little bit, but they went way down a lot faster. So Halliburton is back at the $30 level. One thing to consider on Halliburton, I put these two stocks together because everybody trades them together. Go out to the monthlies and look at Halliburton. You have been down here in this like $27 to $30 area over the last 9 years. You've bottomed every time around like 28 bucks. So you're starting to get that area where maybe, if you think like, this long-term support is going to hold, maybe you take a shot. But man, you got a good argument there that, hey, these stocks really did not go up that much when oil was going up, and they were coming down very fast when oil was going down. This is, we always say best of breed. These stocks are basically the weakest of breed or worst of breed.
All right.
Again, not a ton else, though, as far as ratings are concerned today. Let me pull up my
I've got a couple.
my Benzinga Pro. Yeah, what'd you write down there?
NVIDIA getting an outperform from Credit Suisse. That's helping it along here this morning. AEO upgraded at Deutsche Bank. I've got GameStop, GME upgraded at Bank of America. Intuit catching an upgrade to outperform at RBC. Cognizant, little analyst war here. You got Goldman upgrading them, and I think it's Cowen downgrading them. So there is a few notable ones. Yeah, there's a few there, but there was nothing really like, wow, this calls off the charts.
No, only other one I saw that caught my eye was a upgrade to Schwab from Citigroup to neutral. And that's all I got as far as ratings are concerned.
Right.
So they're pretty quiet. Anything strike your fancy there, Mr. Elconin?
Probably just the NVIDIA here. It's trading up a little bit here at 149. I don't know. I'm just trying to think about adding this one as well. What you had a 133.31, 22-point rally. Boom, half of that, 143, 144. So I don't know. These stocks seemed like to be getting nice pops here, but once again, I'd like to try and get them here a little bit on a pullback. We got a couple of people mentioning RS Outlast. Is that a low floater?
It's a penny or near a penny.
Not a penny anymore. It's
yeah.
What news do you have on that one?
Oh, let me pull it up here in my pro because I looked at it, at the top of the show and hadn't seen it since. They had announced data on a treatment that stimulates nerves feeding into the pancreas to increase natural insulin release.
Okay.
But yeah, so that's objectively a good headline there, but I don't know, much about the stock or anything.
I don't follow this company at all, but when you look at this longer term chart, you just think every time this thing has popped, it's been met with more sellers. So can it continue? It's had some wicked short squeezes in there, though. So I want no part of shorting this thing either, because I can see some of these squeezes have been like, it looks like it went from $8 to $64. I don't know if that's right in the one day. I mean, there's been some crazy movement in this stock in short term. It looks like one day it went from $1 to $7. So you get another one of these wicked pops. So who knows where this buck stops, but I think when you look at this 3 months down the road, it's probably lower.
And as always with these, same mantra with me, you got to take out the pre-market high like 308. You want to get over $3, see it well big, go to 350, go to 4. If not, I look for, sellers to come here. Anybody that picked it up in the last few brackets under $2, $152 area. The all-time high in the issue, and maybe not the all-time high, but if it gets anywhere near 5 million, or is that 5 billion? Yeah, 5,865,300,000. I think I'd be a seller on that one. So one of these low float reverse split stocks fading away. All right, Spencer, we're back here. We're finishing the first show of the week. You want to wrap things up and let us know what's
sure.
on the
If you missed any part of today's show or you want to hear our lovely voices again, catch our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play, or just go to youtube.com/Benzinga TV. Thanks to our guest, Michael Pachter from Wedbush Securities, for stopping by today. It was a great chat with him.
Yeah.
Please remember, all the information and material and content from our show is for informational purposes only and not meant to be investing advice. And on that note, I hope everyone had a nice, good weekend. Hope you've had a good morning so far. And we'll see you folks on Tuesday. Have a good one.